Yes, actually, it's been quite interesting because investors have been looking at and following the polls quite closely. And as you mentioned on the tax incentives, many of those measures do actually require National Assembly approval. So hence, the results of the elections do matter. But I think going from here, what the investors are also looking for is what happens after the election. So there are some timelines that they're looking at. For example, the May announcement of the second round of the corporate value program. Then there's also going to be follow-ups in terms of what the government wants to do in terms of other measures. And so I think in terms of the tax incentives, it's important because I think even in Japan, when you look at the reform, it was actually a lot of it was voluntary, not mandatory. And so if you look at the indices, the disclosure system that you're trying to make, and also the dividend process that's been changed, a lot of it is voluntary in nature. So what is needed is to incentivize the corporates, and hence that's where it's kind of linked to. And that's why there's been more interest in the elections this time around compared to before.
But also, I mean, for the opposition parties at the moment, they may not really want to give further mandate to this reform agenda because it's coming from the other side. But they don't want to give up on the retail cohort. I mean, it's such a big stock market investing population in the country. So I wonder, what is the play post-election, do you think? Any sectors that you like? Is it banks and autos?
Yeah, so I think when you look at the value of program, as you just mentioned, is something that needs to be pushed forth continuously. And a lot of these efforts have been made even in the previous governments. And so it's more of a continuation. And I think as you kind of get into May and June post the elections, we'll have to follow all the kind of policy agenda that's been announced until now. But I think in terms of just the market itself, we've also been saying that we're kind of in a mid-cycle transition. And if the mid-cycle transition is intertwined with these reforms, it is actually going to be even more of a positive. So we have to look at both elements. So the mid-cycle transition, you have to look at external factors such as the Fed. For the reforms, we have to look at the timeline. But if you look at those two elements together, so what we believe our sectors to look at right now are tech, the discretionary, banks, industrials. So all of these sectors are ones that do quite well in the mid-cycle. And also within those sectors, there's also subsectors that are well kind of replaced in terms of the reform drive.
What do you want to see in the government announcement in May? What is really the centerpiece that you will be looking out for?
I think that the key things to be looking for is, number one, is what kind of disclosure requirements are going to be needed in terms of the new undervalued companies and how they're going to report and how they're going to plan this and what kind of time frame that they're going to need. Also, the indices that they're going to announce, how they're going to set it up. Is it going to be like the TSC, Prime, Growth? Is it going to be different? Are there going to be other indices? And I think the most important thing to look for is going to be the key third pillar of it, which is the incentives that we just kind of talked about, the tax incentives and the other incentives that are needed. Together, I think, with maybe some other measures that are needed to kind of incentivize the shareholders also, so such as dividend taxation. So all this is, I think, what we are looking for, but the key is going to be the incentive schemes, how that's going to be set up and how that kind of induces the shareholders and also the corporates to kind of work together to get the reform done.